네, 이번에는 미국 기관 평가 거시경제 분야 1위인 22V 리서치의 CEO 데니스 드부셔를 신인규 한국경제TV 뉴욕 특파원이 직접 인터뷰했는데요. 하반기 미국 경제 및 금리 전망에 대한 이야기 함께 체크해 보시죠.
오늘 이 자리에서는 미국 최고의 매크로 분석 독립 리서치 기관으로 꼽히는 22V 리서치의 데니스 드부셔 설립자 모시고 자세한 이야기 나눠보겠습니다. We're going to hear your outlook for the U.S. economy for the second half of this year.
So the U.S. economy, we think, is going to continue to grow at around 2% pace on a real GDP basis. The economy coming out of the first half of the year was running at a 2.4% annualized rate. To start the third quarter, the Atlanta Fed's GDP nowcast actually has the economy growing almost as high as 4% in 3Q. So that's a lot of momentum in the U.S. economy right now. That's probably overstating the strength. That 4% that you're seeing from the Atlanta Fed's GDP forecast or nowcast, that's probably overstating the strength. But what we do know is that consumer spending is likely to hang in the 2 to 2.5% range, given where real income growth or the labor income proxy is, given the strong unemployment rate, which is now still at a very low level. Positive net worth impacts. Household wealth has gone up a lot. The stock market has obviously rebounded, so wealth effects will probably support the consumer. And most importantly, the housing data has bottomed. Last year, we had a significant decline in housing data that now appears to have bottomed and will be a positive or has been a positive contributor to GDP. Housing data is not going to accelerate meaningfully from here, and we're certainly not making that call. But overall, the economy has a decent amount of momentum. It appears to be growing at roughly a 2%, maybe a little bit above that pace. And we should expect that to continue through the end of the year unless there's some type of shock that hits the economy.
Then what are the things the investors should focus on the next Jackson Hole meeting and further FOMC?
Well, I think investors need to really focus on the things that the Fed has made very clear that they're focused on. And they are data dependent right now. It seems very obvious that the Fed is focused on the labor markets and tightness in the labor markets. The Fed is very focused on core inflation, X housing and X auto. So any data on inflation, X housing, X auto is important to them. Most of that's going to be driven by wages. And so the most important factor is just to maintain focus on what the Fed wants to happen. The Fed wants inflation to come down towards their forecast, okay, on a core basis. For the end of this year, their forecast is 3.9%. For the end of next year, it's about 2.9% on core inflation. So actual core inflation needs to come down in line with their forecast. And if that happens, theoretically, they don't need to raise rates more and eventually can cut. And if that doesn't happen, then they would have to be more aggressive. So what all investors need to focus on is, are the leading indicators of inflation coming down, which increases the odds that actual inflation on a core basis comes down in line with what the Fed is forecasting. The Fed is forecasting 3.9% this year, by the end of this year, roughly 2.9% next year. And if inflation is tracking towards that, expect the Fed to not hike anymore and potentially cut rates in the future. And if inflation stays above those numbers, then they would potentially have to tighten.
By the data we have so far, do you think there's a possibility that the Jay Powell goes to a little bit hawkish in this Jackson Hole meeting?
No. The data has been I think if he's going to be more hawkish, it'll probably be December, January period. If it becomes obvious by that time that inflation is not coming down enough. But for September, the odds are pretty low that he comes out surprisingly hawkish. And as long as the trend in core inflation is lower and the federal funds rate is plus 5%, then there's no reason for him to be more hawkish than expected for now. So expect the Fed to pause in September.
Thanks for your great answer. And let's move on to U.S. stock market. By the first half of this year, Korean investment in foreign stock market is over $74 billion and in surged 34% year over year, and most of portion is US stock market. So, and actually the US big tech, I mean the Tesla and Meta, you know, yeah. So do you think investing in big tech is still a good idea?
Depends on your time frame. So I would say that over a longer term horizon, which I would say over a 1 to 2 year period, investing in a big tech is still a good idea. The companies are absolutely extraordinary. They're the most positive cash generating machines we've ever seen in investment history. So whether it be Apple, Google, Amazon, et cetera, the cash generation from these firms is like nothing we've ever seen before, and there's no reason for that to change. So if we're in a positive economic growth environment and inflation is slowly going back to the Fed's target, investing in big cap tech is going to be absolutely fine over a 1 or 2 year period. Now, through the end of this year, I'm not sure that there's much more room for tech to outperform. And so I do think there's probably some consolidation in the large cap tech names through the end of this year. And we would be more focused on small caps, deeper cyclicals, and deeper cyclicals defined as energy, materials, and industrials, and some other idiosyncratic themes like retail names that have been unfairly punished by inventory overhangs earlier this year. So either very specific themes, like I just mentioned with retail, some transports would fall into that category. We like deeper cyclicals through the end of the year, energy, industrial materials. We like small caps relative to large caps.
Thank you for your great answer. And that's all for today's interview with Mr. Dennis DeBuscher, the founder of 22V Research. Thank you so much.
Thank you.